Oh,
100%.
Okay, ladies and gentlemen, thank you very much for attending the round table today, and the topic is group insurance. And actually I want to congratulate Eleanor from AIA, because if you read the Super Review magazine this week, you'll discover that AIA have for a second year in succession been named Group Insurer of the Year. So if you keep sending the money, Eleanor, you'll keep winning. Yeah,
It's working.
That's a joke. It's a joke. But look, what we were just discussing earlier, that one of the more topical issues at the moment is the fact that there has been a lot of competition in the group insurance market, and I guess a lot of debate about whether some of the companies that have been out there in the market perhaps were lost leading a little to try and grab mandates and market share. And I think because we have quite a number of fund executives here today, that it might be worth starting by asking, A, did you notice that, and B, if you didn't choose to take up what looked like a pretty sweet deal at the time, why not? And I'll start with Robin, because I think your fund actually chose not to.
Well, no, that was one of the things that we looked at very carefully, was recognising that the risk for us is actually the problem with premiums going too far down. And the fact that a guaranteed rate period only lasts for a certain period of time, what we were concerned about was going out to our members with a saving, and 3 or 4 or 5 years later, depending on the guaranteed rate, that would actually turn around and be worse because of the issue that they had at the insurers side. So we spent a bit of time talking to the insurers about that, making sure that they were quoting us with a competitive market rates, but not to a situation where they were not comfortable with the 3-year projections on their premiums and claims. And we actually do meet with them on a regular basis and look at their premium and their claims history, and so that we can make sure that we're aware of what's going on with our insurers.
John?
Well, we're in a different situation. We haven't actually been to a full tender for be 6 years now, but we did get a market check 12 months ago, where we decided to reappoint our existing insurer, Hanover, on the basis that the independent consultant we used to test the market for us said that you should be able to get a 10 to 15% reduction in premiums, because that was quite an old contract. And Hanover came back with something very much in that range, so we were just happy to go with that. We think that was a fair contract for our members and for Hanover, so we're not in that awkward situation at the moment.
Michael?
Yeah, we've just gone to tender as a result of the pricing that our insurer brought to the table. We did kind of see it coming. We had a couple of discussions, as you do, you check from time to time. There was quite a substantial potential increase coming if we stayed with the same insurer, so we've elected to move to another insurer. There is a small increase as a result of that. But the position is we discussed at the time, we accepted the low price, whether we should reconsider that or take it, and we thought if we're getting a better deal for members and it's on the table, we should get a better deal for members. We've had the increase this time around is the first one after 3 decreases in a row over the last 9 years, and the increase is still well below where our starting point was when we first accepted the decrease. So overall the members are still in a strong position, but it has resulted in us having to go to members and tell them there's an increase which starts in December.
Hayden?
I look at it from an administrator's perspective, but I can certainly say from seeing what our clients and talk to insurers that I don't believe that people would get rates as favourable this year as they would have 12-18 months ago.
Peter, from another administrator?
I agree with Hayden. We see that there's been a fair bit of pressure on some of the the group insurance arrangements, and funds are continuing now to look. We see that we feel the impact at the end when you've got to go back out to the members, and nothing upsets the mothers of the children more when the rates are going up, and we see the angst at that end, and we do feel like we get a bit of an upward trend.
And Eleanor, as the insurer here, what's your perspective on how the market's been operating and the sort of reactions you're hearing here?
Yeah. I guess from our perspective, we've seen some differences in from a reinsurance perspective, how they viewed the claims experience and the future experience. So there's been some vast differences in what we anticipate the future trends to be. So that's probably bringing out some of the differences in the pricing that you're seeing, and that drives some of the insurer pricing. We are very keen to make sure that there's sustainable pricing going forward, and we also look at benchmarking that with some independent consultants to see whether there are differences in opinions of those future trends. So I think just making sure that there's that independent benchmarking in there means that we're probably going to drive greater sustainable pricing and not have that flux of communications going out to members given those premium changes.
Okay, well, of course, one of the big things that has been discussed endlessly in 2012 has been MySuper and the manner in which it will be implemented, not just in terms of MySuper offerings, but I guess in terms of default funds under modern awards. And of course, there was a lot of discussion about how insurance would play into that particular model. So again, starting with Robin, what's your take on offering a MySuper product and how insurance will fit therein?
I think in our case, what we're offering is a default product, and which we've always done, and we've always offered a default level of insurance cover, and so we will continue to do that. The issues that we've had is around the definition of TPD and what that impact is on the membership going forward. We have a unique group of members who are from the energy industry in Queensland, who are actually regional. A lot of them are regional, so the definition of TPD has been the biggest issue for us. We will continue to provide a default insurance arrangements because I think we've seen over and over again how it has benefited our members, sadly in death, but also in total and permanent disablement. And so we believe it's still a very good opportunity for super funds to provide value add.
John?
Yeah, I think certainly for our MySuper product, or for everybody's MySuper product, insurance will be one of the key differentiators that people can put in. Everything else is so prescribed, it's very difficult to differentiate. So we think the insurance is absolutely crucial. With all default products, the most important thing is we've got to recognise that most people won't make a choice. So it's our responsibility to make sure that the default is really good. In our case, we're a similar industry to Robin's. Most of our members are from the energy sector in Victoria, in New South Wales, and some in South Australia. But that we've got a history of defined benefits, so we've always captured salaries, and so our insurance base is actually related to salary. And we think that we've only had that in place for a bit over 12 months, but we think that's a fantastic way of actually differentiating ourselves and providing benefits that are probably more akin to a person's needs rather than just something that's dictated by their age, which is sort of the traditional model. So, we think it's very important.
Michael?
Yeah, we agree. As an industry fund, we've always had the default arrangements. We continue to have that. Our biggest problem has also been the definitions and getting them to fit in. We have a lot of freelance workers and a lot of actors in our fund which are on and off workers. So if they happen to have a TPD claim at the wrong time, we have activity daily living definitions which become problematic under the new rules. So we see that definition issue as a problem. But we think it's important to have that default. We have income protection as well as a part of our default, again because we have freelancers who may struggle to get proper income protection if they try to do it on their own. So we recognise that as an important element of our insurance arrangement for our members, so add that as part of our defaults as well.
Okay, we'll move to Eleanor in a minute, but I've got the countdown going there, so we'll just pause. He's really just checking my pacemaker.
Well, on all of us, isn't it?
I have a pacemaker if I have a heart. Okay, Eleanor, you've heard what they've had to say, and MySuper has posed its challenges, I guess, for insurers. What's the AIA approach on that?
Each of our funds are different in terms of what needs they have in being compliant from a MySuper perspective. We're definitely working very closely with them to support them. I guess from our perspective, the MySuper regulations really just re-emphasise the importance of insurance within super in terms of meeting the needs of Australians. But I think it's also beyond product. It's also from a service perspective that I guess we see insurance being a differentiator for our funds, from working with our administrators and ensuring that that member experience is strong. They've got flexibility in how they access their insurance, tailor it, additional services such as rehabilitation. I think it's those packaged up, not just the product, but also the service that goes along with the insurance is important.
Peter, from the administrator's point of view, I mean, My Super has all sorts of challenges, but I mean, looking at the super data, the insurance.
The insurance, we've probably got 25 different funds and 7 different insurers. So, I think we made the comment before, it is clearly now being seen as a differentiator. So for us, the real challenge, we've got a couple of funds I think that need to probably enhance their insurance offering. They've got to add TPD and IP. So, we've now got to try to find, the right balance between, all of those all of those insurers, the service proposition. For us, that's probably the biggest change. I think is how do you manage that whole claims experience, going forward across, the variety of ranges, because it is going to become a differentiator in the MySuper world for each of the funds.
Okay.
Yeah, I'd agree with that. I think that as a starting point, insurance is critical. I mean, if we're taking the perspective of a fund that's in the best interest of members, you've got to have insurance. We're provisioning for retirement in superannuation itself, but you've got to actually have a hedge against something happening in the meantime. From an administrator's perspective, yes, we see it as a differentiator. I don't think, whilst it's a default offering, I don't think one size fits all. There are different types of members of different types of funds, and we just need to work on making sure we've got a balance that recognises that without overcomplicating things. So in administration terms, which really flows to value to members or cost to members, we need to make sure we've got a practical offering so that it can actually be offered to them, meet their needs, but do it in a cost-effective way.
Well, Hayden, you raise an important point there, which is one size certainly doesn't fit all across the super spectrum, but there is this belief, I think, still in Australia, and notwithstanding the best efforts of the industry to educate people, that the insurance they generally hold in super is enough, and very often it's really just the default insurance, which in Sydney, if all you're going to get is 250 grand, then probably you can't keep the house. So what do we do as an industry about informing members of funds about insurance options within super, and how do we get them to understand what is enough?
Well, that's a challenge that we've been working on for quite some time. So a couple of things. One, of course, is making sure that insurance is flexible enough to meet everybody's needs. Secondly, it's about education and it's about communication. So we've spent a lot of time on our service delivery model, which ends with either the educational side of things or single issue advice. And so what we've seen over the last 2 years is an increase in our insurance statement of advices that go out to our members. And that's gone from an investment choice predominantly to now an insurance predomination. And that's because we've spent a lot of time communicating to members about their insurance cover. And that's paying through by getting that sort of feedback through our call centre or through our single issue advice team.
John?
We've taken a slightly different approach. I mean, we certainly believe that it's important that members have insurance and that they exercise the flexibility. So our default is 4 times their salary. So if somebody living in Sydney is on 200 grand, you're going to get 800 grand. They might be able to keep their house, I'm not sure. But we're working on the basis of once there's a claim at a particular employer, that's the time to hit with insurance education to members. Because everybody knows, Mike had a heart attack, he's not going to come back to work. So it's very top of mind. We actually had 2 members at one plan who both drowned at the same weekend at the same place. And the take up for the voluntary additional insurance after that was, as you can imagine, that's amazing. So that just is a common sense way of actually making it real to them, because the problem is super's boring and insurance is really boring. I mean, I think that's the reality from a member's point of view. So it's a challenge for us all, I think.
Michael?
Yeah, we've taken an approach of educating communication as the primary factor. All our communication materials, so newsletters, statements go that with reminders that they can increase cover, but we find the greatest success is when there's someone actually on the ground. When one of our relationship managers actually visits the site, that's when we get the most success. So we try hard to visit as many sites as possible and promote the insurance arrangements there. Off the back of the claim often is a good time we brief that, because we do see an increase, especially on the income protection side actually. People wanting to make sure they're covered, or people have cancelled it, adding it to their benefit when they find out that someone there has had to claim on it. So we think people are the greatest success, and so we've used an outlying caller too on some of those cases where people have applied but it became too hard to try to get them to get the finalise the insurance arrangements, because it can be complicated sometimes when reports and that come into it. So people are the biggest asset to get people to look at their insurance arrangements.
Eleanor, it's the perpetual thing. Australians are insured. Yeah. Can you do more than you're doing? Is there a message that can be driven through?
I think it's about working with the funds and their particular members. Member demographics is going to be different per fund. So understanding what that group insurance product is going to fit from a default level, and also opting up different levels of cover as their life stages may evolve. But also looking at the members' needs from a holistic perspective. So what the insurance within super can cover, and then if they need anything else outside of super to complement that in order to meet their individual needs, because like you said before, it's not a one size fits all, and whilst the group insurance may cover the vast majority, there may be sort of other elements outside of super that need to complement that, and that's where I think the partnership between the fund and the insurer really needs to come to the fore.
I think the biggest issue that we've got is the underwriting process, and so one of the things that we've done on a regular basis with our insurer is to actually offer a window, a period of allowing people to opt in without medical underwriting, and that's a critical piece, particularly for our membership, where that's an important value add, and that also leads to the education and the single issue advice coming through, and that allows people to then think about their insurance and tick a box as opposed to going for a medical, going for blood tests, going for all of the other sort of stuff, because at the end of the day, not a lot of people are going to be able to do that. And I think that's where group insurance has the ability to do that, because you're actually managing the risk across a pool of people rather than an individual. And that's a critical thing that superannuation funds can offer members that can't be done outside on an individual policy, I should say.
Peter, administrators are often on the front line dealing with calls from confused members, angst-ridden members. What's the experience there?
It's probably quite varied. I mean, on the claim side, obviously, there's they've gone through a traumatic period, and I think there's a much greater awareness and focus on the training and the support. They're quite different now. We've got a lot of our funds now have taken much greater account of the demographics, and so you've got much lower levels of cover at the 18 to 25s, and then you reinstate at higher levels and things like that. People are, I think, on balance, generally unaware, uninterested, and it's not until we have free top up, or you can get up to AAL, or extra units, it gets people encouraged. Quite a lot of communication goes out. We've got a number of funds now who are using online, so they've got online underwriting tools, because people typically, as Robin said, they don't. If they suddenly think they've got to have a blood test, they've got to have, it's almost like, I'm scared of what the answer is, so I'll go up to the cover level that I can get without having to go and find out, and they just don't do it. So I think it's
just too hard, isn't it?
It's too hard. And for us, we've got funds from completely different industries, but typically people don't do it, and people around the table are not that much different. So if they can find a simple online way to do it, accessing periods where they've got cover, I think that's really the best option. It's not until they have a claim and suddenly they've got hundreds of thousands of dollars in there, do they recognise the benefit of it?
I agree. Part of that is it has to be about the convenience, like the insurance and the accessibility of that process. So,
Aidan?
Yeah, I think absolutely it's got to be easier. I think people have to have the motivation. The one thing that we see is people actually, and the same with house insurance, people don't realise what they're covered for until they have to claim, and then sometimes they get a rude shock. And I know for staff dealing with it, you're dealing with someone that's in a really bad place, and it's very emotional for them, and you've got staff wanting to do the best thing by the member, and sometimes it's a bit late. So I think John was saying you almost use that emotion to sort of get people the motivation, and I think Robin's point was absolutely spot on. I think single issue advice or limited advice, we provide advice services to our clients as part of Future Plus's offering. Less than 20% of the people that actually contact us for advice actually go to full advice, because I think people find that too hard and too confusing as well. But if you take an issue like insurance, it's as critical to them, and just really make it simple, access to it simple, and give them that motivation, and they'll probably will go and have the blood test and do the thing because they can actually see the benefit. But I think it's a huge issue, absolutely, and it's only going to get worse.
Okay, we'll have a little break there. We'll move on next to the infamous auto consolidation.
What's that?
I like that.
No, I think
And that could be one for the back page.
you could use that one.
That should be our administrators talking
Hmm.
What a
about it.
conversation.
Okay, we're back, and
Yes, we just
let's
need to know
move
what
the
auto
conversation along a little.
Yeah.
And of course, part of the whole stronger super thing, the whole piece there, and it makes a certain amount of sense as auto consolidation. But of course, it's been my experience that a lot of people have a lot of super accounts, not just because they're lazy or they got lost or whatever, but because they deliberately want them for the insurance factor. And the government's, of course, introduced auto consolidation at a level which some suggest is actually going to impede those people who are just keeping minimal balances to access insurance. So again, starting with you, Robin, do you think it's going to work and not disadvantage people?
There are risks, right? There are risks, and I think insurance is one of them. But we've actually allowed consolidation of insurance in our fund for quite some time, so that people can actually close their account and move their insurance across without any underwriting. How you do that in a paper-based process with the ATO involved is really the critical piece here, because obviously the insurer won't cover it for a period of time. It has to be a fairly quick and succinct process. Because premiums have to be paid. So that, to me, is probably the critical piece. I think there's probably a lot of funds who are actually offering the same sort of thing as what we're doing, but it's how that process is going to work, and I think that's why the administrators are a critical piece to this process. And I think also that the super stream should go further to acknowledge the insurance coverage in this particular process from electronic transfer.
Mike?
I agree wholeheartedly. We offer the ability to move insurance over from one fund to ours. And insurers have done that for some time now. I think the biggest missing element is the ability to get the information from the previous fund, so that you know whether they had an exclusion or a loading, etc., etc. So things don't come back to haunt you further down the track. But I think the consolidation service is great. I think it should be treated like the rollover of the monies. And the rollover notifications between administrators should clearly give the information as to the acceptance basis of the old insurer to get away any of those risk factors. But I think it should be taken advantage of more often, and we encourage it heavily in our fund, and have for some time now to great success. Especially on with a lot of the companies working in media, we have a lot of companies that have their own in-house corporate. A lot of retrenchments going in the industry over the years. That when they get retrenched, they'll roll into the industry fund and bring their insurance with them. And a lot of those old corporate funds, especially old defined benefits, have good quality, high levels of insurance that the members no longer have to lose because they're no longer working there. So it is important.
John?
Yeah, it's not a big issue for us, but I'm certainly very worried about how the administrators or administration systems will cope with the process. So I agree with Robin. I think it's an admin issue. It'll be interesting to hear what the gentlemen have to say.
Well, we'll go straight to Peter. Peter, what are you going to do?
Look,
Come on, lift.
For us, it's going to be a real, it's going to be a real minefield. I mean, we run the risk of it being a real minefield. We've got, one of our largest funds has got, relatively low account balance. Quite, they deal in the retail industry. The opportunity to move. It's always a challenge to try to work out, are they actually covered? And I think we are concerned about the risk of people losing their insurance. We've got to try and sort out, have they got insurance as you move, and the delay is going through the middle. And in the end, the insurer is going to be concerned about, selection and, being paid and things like that. So, we've got a lot of insurance cover that's employment based, it's account based, and they move and then you merge funds, and for us it's it is a real concern as to how are you going to make sure that people don't lose, because it looks like from where we sit a lot of members are going to finish up losing their insurance. It's an unintended consequence.
Yeah, I think it's the unintended consequences. As Robin said, look, there are risks. I think the first thing is we can't just start with the premise that people that have more than one account are lazy. I mean, yes, there's a majority that are disengaged, but I think we need to first of all just have a process of working out who's legitimately got more than one account. So I think the auto consolidation is the issue. Consolidation in itself, I don't think is a major problem from an administrator's perspective. It's more about identifying who to consolidate, and I think that's back to that's really about having your member data and being able to understand the member. what have they got, what cover have they got, and where is it? Which account are we going to consolidate into the other one? That's the key question to me. So yeah, that's where the complexity is, all I see is a hell of a lot of sieving through data to try and work it out.
Yeah.
Yes, the administrator's going to have to get a lot of that data, but we're going to have to work very closely with funds and insurers to actually work out, what is equivalency of benefits and what's not. And this is all to be done in the best interest of members. We shouldn't just put that and say, for the greater good, we're going to consolidate everyone. It's what's in the best interest of members. It's real money and it belongs to other people. We can't lose sight of that.
Yeah, no, I agree with all the comments. I think, like you said, it's absolutely in the best interest of members, and we don't want it to be at claim time when the member realises that what they thought they had cover for, they no longer have. So we need to make sure that, obviously from an administrative perspective, we get the right amounts consolidated, that the messaging that goes out, the notification of consolidation, if they wanted to opt out, that they can, and they understand that they can. So I think it's just making sure that obviously all of that before claim time goes seamlessly so that there's no issue at that time.
It's going to be hard, but because the whole premise of My Super is the fact that people are disengaged, yet we're going to rely on communication through the media to tell these people if you stay disengaged, you're going to lose your insurance. So it's really just contradicts each other. So how do you then act in the best interest of members? And it's really hard.
And if we go outside, an industry fund space and look across it, it's probably still there, but it wasn't so long ago that the biggest thing of the retail providers was share of wallet, the banks. And so the more product you sold to a client, the better you were. So there was almost a push to have more than one account, whilst everyone said, we'll consolidate, and all they did was make companies bigger, but it was about share of wallet. So there's people out there that have probably actively been sold more than one account.
But, quite some time ago, there was also the issue that if you had insurance, more than one insurance under different policies, that you would only ever be covered under one policy. That's changed. Right, so now what we're talking about here, and this is what I was talking about risk, now you've got to look at it from the point of view is that you're actually reducing members' benefits when you consolidate, because you can actually get an entitlement from two different policies. And that's an issue that, and I think, Mike, that's what your questions are alluding to, is how do you manage that risk? And if you look at it from a risk point of view, when the member's time to claim and they find that their benefit has reduced from 100,000 down to 50 because we put two accounts together, but don't worry, they saved $10 that year in administration fees, it'll be a very difficult conversation to have. And that's the premises that we're trying to bring through to the Treasury and government, that's a real issue, and that has to be dealt with. And it can be dealt with via auto consolidation by bringing the two accounts as they are together. But then that's the insurers have got to look at that, and then obviously the administration systems, and there's a whole raft of things that I don't think we're ready for.
No.
And there'll be processes with the whole Fund A, Fund B, Fund C proposition around auto consolidation. Every fund who is B, C and D is going to be then looking to provide some sort of information or advice, single issue to the member, and my sense, being the cynic, is the member will just get more and more confused and they'll opt out of the whole process. And we looked at the other day, we were talking about the 200 to 2,000 lost member change and what's going to happen with all of that insurance, because a lot of our funds have got threshold based insurance. We've got lower account balance members typically, and it'll cut out at $1,000. So when you move to 2,000, we've got a lot of people who are in that bucket who have insurance who we're now not sure what they're going to finish up with when they get moved across to the tax office.
Well, one I guess for the administrators is, given the timetables that the government has put out there, I mean, this is far from resolved. Are those timetables any longer at all realistic?
I think so. We understand there is some talk about moving auto consolidation back, but I think there are so many still, large, unidentified and unintended consequences we haven't even thought through. I think we don't see that we're going to be able to get to a sensible position by the 1st of January 14, and have these sorted out. There's no legislation yet. I think it seems to have gone quiet now with the move to the 200 to 2,000. I think they're going to wait and see, do they get the right answer before they then cycle back to auto consolidation again.
And of course there'll be an election in between.
Yep.
All bets are off.
That's right.
Hey?
I agree with it. I mean, the complexity, as I said earlier, is actually in understanding what members have and what's going to be the outcome of consolidation. And to do that, you actually need to have the firm proposals or the firm legislation to say, here's what the guidelines are. It's only then you can actually start to drill down into the data and work out what the consequences are going to be, intended or unintended. And until you've done that, setting a deadline is, it's just not practical, I don't believe. It risks the unintended consequences being far more unintended than you think. So.
Take a short break. Okay, and we're back. I guess too, moving away from water consolidation because it is a deep dark place at the moment. I think one of the things that probably interests journalists and perhaps even the old superannuation fund member, if they ever think about it, is faced with the market for group super at the moment and the number of companies in the market and running the tenders that determine who gets what. What would you rate as the most important element of selecting a tenderer to provide group insurance? What is the thing that you would say is most commonly looked for? Robert? It's an easy one.
I was going to say, do I have a top of the list? Well, actually, no. There are multiple levels on this front. And first of all, it is about the product offering, and the product offering has to actually meet the membership database, right? So the fund actually has to be fairly clear about what their membership groups are and what is important to that group of members, particularly from an insurance product point of view. Service is absolutely critical at the time of claims, and I think, John, you pointed out very clearly that this is a group insurance arrangement, so your mate next to you who has a TPD claim will be watched and monitored by all around them, and that's a critical piece as well. So you need to make sure that the service levels are agreed, particularly when you've got people who are in a very difficult situation. And then finally it is coming down to the pricing. And the pricing of can be one of level, the pricing amongst the insurers, or pricing against what you currently have in place. And you really have to look at all of those three together. And across that is the risk that you're implementing something that can't be sustained. And sustainability is a critical piece going forward, because if you expect to do this every 3 years and see the premiums go up and down like a yo-yo, I don't think any of your members will appreciate that significant event notice every 3 years saying the premiums are going up, the premiums are going down. So sustainability has got to be a critical issue here as well.
Yeah, I couldn't agree more. Robin covered off all the key issues. And I think it's going to be very interesting shortly when one of the very large super funds in this country does have an increase. And I believe it will be quite a significant increase. I don't know if you know about this, but my understanding is that, that one of the funds is going to have a very big increase as a result of probably looking for unsustainable solution last time they went to tender.
Michael?
Yeah, I think Robin's right. I think the first priority for us is always offering, because having journalists, actors and so forth, we've had some unique offering. For example, we can't have a restriction on people who aren't having passengers on a flight because a reporter might be on a Channel 9 helicopter and have an accident. Under that definition are not covered, so we have to have unique definitions for those types of members of the fund. A lot of actors work overseas for long periods of time, so we have to have a greater period in which they can work overseas, etc. So offering plays a major part in our policy. Although pricing is extremely important, claims is when people hear about issues. It's not the price. As I said, we've gone out recently for an increase, and we're surprised at the lack of interest in the fact the price went up. We were gearing ourselves for getting relationship managers out to sites where we saw problems with complaints and so forth. We had, really very little in the way of even calls about why. A handful in the first week. But when a claim goes wrong on a site, we hear about it from the union, we hear about it from a group of members. So it really is that claim process that really takes a high priority in how your insurance policy is actually, in your fund, is actually judged. So that's extremely important.
I guess administrators, you're just processing the thing as long as it's working. It's
do as we're told. The biggest challenge I think for us is making sure that we finish up with a product offering that we can support. You can't always control employee behaviour, and if you've got an insurance offering that's driven around on-time contributions and cessation of employment, they're probably our continued cover, those sorts of arrangements for us in the sorts of industries that we deal with. We deal with 400,000 employers, and they will pay late, or never early, but they'll pay late, they'll pay not at all. And I think finding a product offering that you can administer with some level of certainty, because the insurer wants certainty, the member wants certainty, our guys who front the contact centre need to be able to tell the member this is what your cover is. And for us, that's probably been the biggest challenge, that whether it's $1 or $1.20 for us is not so much the issue. It's very much about our inability. The thing that causes us all of the frustration here is our inability to be able to properly support the design that comes up. And partly it's driven because of the employer behaviour. We've got very large employers, and we will find we've got employment linked cover at times, and you'll get backdated terminations that go 18 months. So are they covered? Are they not covered? And the members die, and so they're for us. So that's probably the key. And then what is the service expectation at the other end, and then accessibility, whether it's they've got online capability and dial up for us certainly helps.
Yeah, I mean, starting first, I think Robin's points were spot on. Any insurance offering needs to basically meet the needs of the members, and one size doesn't fit all. So matching it to your member database. I think the second thing is, and certainly from our perspective, is making sure that the service is there. The time when a member will contact us about their insurance as the administrator running the contact centre or with the financial advisors is the time when they're probably least equipped to deal with any service problems. They've got other issues that they're dealing with that are quite more traumatic, and so you don't want some service issue, because that's really when it does get out of hand. And I think the other thing too is just on pricing to realise that we're dealing with members who are in the fund for their entire working life. That's the aim. So getting a good deal on premiums for 3 or 4 years isn't going to actually necessarily be in the best interest of members. I think from an administrator's perspective purely, if the offering matches the member base, then I think normally it's pretty complementary in terms of what we're supporting as a product. And I think where there's an exception, yes, there are issues when you probably need to sit down and just explain to an employer or to a fund and saying, if you want to do this, it's going to be far more complex. There are risks around whether it's service or value delivery. But overall, I think if you match the member or the member needs with your benefits and put that as your first and foremost approach, I think that'll get you the best outcome.
I agree. Yeah, I guess we've seen the most success where there is that alignment there. So from an insurer perspective, where we can align our service, be flexible in our model depending on what the fund's requirements are, align our product to the member needs, and also have that alignment of cultural fit between the fund and ourselves to make sure that we are, working in the same way, we are driving towards those continued improvements in member experience and the offering to the members. I guess that's where we've seen the greatest success, not when it's just purely about price. I was encouraged by your comments around it being a package of elements, product, service as well as price.
Well, ladies and gentlemen, that brings us to the end. Thank you very much. I think it's actually been a really good round table, and thank you for your participation. We'll publish it sometime next year. Thank you.
Thanks, Mark.
And you get a tick from Pauline.
I get a tick from Pauline just.
You could feel Pauline breathing down.
Oh, I could.
You don't want to miss the opening by Tony.
I reckon we should also have to give it 10 minutes and see what she does.
I'll be a dead man walking.
Yeah, sure.
Not the first time I will lose it.
Yeah, so I can say the camera, John.
Yeah.
Oh, did you? Yes. Good, glad you see it.